Welcome back to my daily report market analysis videos with me, Richard, market analyst at Hantec on Wednesday, the 2nd of September. Well, we've got a risk rally that started to take hold once more this morning, but it's also coming amidst a minor little dollar rally as well. Dollar's been under huge pressure throughout recent weeks, breaking down in the last few days, but rebounding yesterday into the close. We saw comments from a couple of reasons really. You had early doors. You had the eurozone inflation, which moved the eurozone into deflation territory. But then into the afternoon, also you had comments from Fed's Lael Brainard, who was basically talking about further accommodative easing, further monetary easing measures needing to be taken by the Federal Reserve. So subsequently, the market sort of took that as not necessarily dollar weakening, which was interesting, even though we did see that the US 10-year Treasury yield fell back again. But it's just started to see that the dollar is picking up again today. A little bit of a technical rally has taken on, but it's still within the realms of this big downtrend. I would still see this as a rally that you'd be selling into for the dollar. So subsequently, we have seen euro dollar back under 119 again. We've seen dollar yen back above 106 figure. And I just think these moves are temporary, really. Gold slipping back a little bit. But again, I think temporary moves. Now, the strength we've seen through continuing all-time highs on the S&P 500 now. Again yesterday, and once more, seemingly the futures are bursting higher through to all-time highs today, and that has really started to help these European markets, which, allied to the weakness in the currencies, are up quite strongly, 2%, 2.4% on DAX. FTSE, my charts today, and I'll talk you through that FTSE chart in a bit, but just general underperformance continues really. And yeah, some interesting moves that we're getting today. Now, in terms of data points today, we've got the ADP employment, we've got factory orders, and we've got EIA crude oil inventories. ADP didn't call the non-farm payrolls report that well last month. Actually, was a pretty bum steer. So just take that with a bit of pinch of salt, 950,000, although payrolls is expected around 1.4 million on Friday. Factory orders was 6.2% last month, growth of 6.0% this time around. And also crude oil inventories. We had that Hurricane Laura producing the outages and in the Gulf of Mexico. So it'll be interesting to see what that happens to, what the impact that will have on the inventory levels. Okay, now, so taking my chart of the day is the FTSE 100. Now, I'll show you this chart of FTSE, which just utterly disappointing. Just everywhere you look, really. It's had a rally, and then just for the last 3 months, it's been drifting and falling over. It's had a technical rebound today, 1.7% higher. But you wouldn't be buying that necessarily. I mean, it's a move that, sorry, wrong way. It's a move that I think is another chance to sell, really. It's back into all these old lows. All these old lows are overhead supply effectively. You had a breakdown yesterday of the 58.57 old August low. Intraday basis yesterday, September, was sort of 3.5 month lows on FTSE. So bearing in mind that the DAX and the S&P 500 have stormed higher through this. FTSE, not so much. I mean, if you actually take it, S&P 500, I think rallying something like 60% from the lows. FTSE's rally around about 20%. So you can see the scale of the underperformance there. But technically, you'd be selling into strength, really. You've got this downtrend channel. You've got overhead supply starting to come in around this 38.2% fib level. That sort of leaves 59.50 up to 60.62 as a resistance band, and with the 38.2% fib level as well. I think this rally is going to do well to continue. You've got the little downtrend channel that comes in at 6100 area today, so that's obviously falling as the week goes on. I'd be saying that this is likely to be seen as another opportunity to sell this FTSE rally, or at the very least, in to play continued underperformance. Possible pairs trades you could take through that. You could go long Wall Street, long the DAX, and short FTSE as a sort of a bit of a hedge trade. So you could try that, but it certainly is an underwhelming chart at any stages of the FTSE 100, really. And it continues to be so. So technical rallies seem to be a chance to sell. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website, sign up for our webinars, and also click to watch Trader Talks, our videos that give you top trading ideas.